We have breaking news for you now. The latest inflation data have just been released by the Bureau of Statistics. This is a crucial batch of data ahead of the first interest rate decision of 2026. I'm joined at the desk here by political correspondent Cam Redden. Cam, talk us through the numbers. An inflation rise of 3.4% in the year to November, but it's better than what the market had expected.
Yeah, it's down from 3.8, Trudy. The market was expecting 3.6. So yes, this is still outside the Reserve Bank's target range of 2.3%. In other words, it's higher than what they would like, but it's a slightly better result than expected. Now, this is a slightly delayed batch of information. It's for the month of November. So it doesn't take into account, for example, the Boxing Day sales period. It does include Black Friday, but typically there are sales around then. So that doesn't necessarily see an uptick in inflation. The long and short takeaway of this is it's an encouraging figure. The market is currently 2/3 to 1/3 in favour of a hold for that first interest rate decision, which is on the 3rd of February from the Reserve Bank. So it's not a firm indicator that a rate rise is necessarily coming. It shows that inflation's heading in the right direction. But is it heading in that direction fast enough, Trudy? We'll go through some of the data at the moment, but one of the key focus points will naturally be on electricity, because this has been a big driver for many months now, for several years. And as those rebates have come off, remember the federal rebate expired on January 1, we have seen that number continuing to tick up. But this is better news. So inflation, yes, it is very high on an annual basis, 37% in the month of October, still up nearly 20% in November, but that is a downwards trend, at least month to month on a yearly basis.
And we haven't yet to see, we're going to get this data in coming months, Cam, about the impact of the federal rebates coming off, no extension announced by the Treasurer on that. Also just wanted to dig into a little bit of the other information here from the ABS. When you look at the trimmed inflation, that's the trimmed mean number. That's the number that the Reserve Bank looks at closest when it comes to deciding those interest rates. That number coming in at 3.2% in the year to November. That's down from 3.3% in the 12 months to October. Don't forget, though, when we got those revised forecasts from the Reserve Bank at the end of last year, Cam, that they had not expected the trimmed mean to come back into the RBA's target band until the end of this year. That headline figure, according to the Reserve Bank, they're not expecting that back down in the target band until into next year. So there's still inflationary pressures clearly in the Australian economy that the Reserve Bank's certainly on a watching brief in terms of rates.
It has, though, trended down, Trudy, and this is the first time, from what I can see, in well over nearly 6 months, that it was actually going back down, that trimmed mean. So it dipped into the target range in the middle of last year following the budget. People are saying, great, maybe more cuts are on the way. And then suddenly it spiked up again. It's been above 3%, rising 3.2, 3.6, 3.8, and now at 3.4% for that month of November. So it is an encouraging sign. The government's going to be pretty happy with this, Trudy. It's better than the market expected, better than many economists were expecting too. And the hope for the government here would be that maybe that spike was temporary at the end of last year, that if this is a promising trend and that trend continues, then things might be looking up from an economic front.
Yeah, they'd almost declared success in the war against inflation. It's now looking a bit more bumpy, that road ahead. We'll get more analysis from Warren Hogan, the economist, coming up in about 10 minutes or so. Cam Redden, thanks for joining me at the desk with that breaking news.